My guest today is Ben Wolff. Ben is a co-founder and developer of Onera, a luxury treehouse resort in Texas Hill Country. The company develops and manages a 65 million portfolio composed of landscape resorts, boutique hotels, and luxury retreats. Ben is leading Onera's 35 million expansion across 50 keys and 2 locations in the Texas Hill Country to be completed by Q2 2025. Thanks a lot for coming to the Holdco Builder show, Ben.
Thanks, Mick, for having me on. I know that was a mouthful, but I appreciate it. You nailed it.
Perfect. Let's start from the beginning. You posted on Twitter that the year 2015 you were broke, 30,000 credit card debt. There are so many opportunities on which business to start, where to invest your time and capital. Can you walk us through your journey graduating from college to your first Airbnb and then co-founding Onera?
I can, yeah. I would love to say that my credit card debt and sort of my bottom there was right after or during college, but I graduated in 2011. So it was a few years after there that I actually kind of bottomed out. Yeah, so I graduated from NYU. I was already living in the city. And that provided, really tremendous opportunities for learning, for growth, for working with exciting companies. The tech scene at the time in New York City was just bustling and super interesting. I actually helped found a group called Tech at NYU, and it was all about, technology startups. And I was not a coder. So my whole sort of angle and interest was more business person or non-tech founder in tech. And come to find out, at that time, it was a bit of a unicorn, right? There weren't a whole lot of non-coders that had a ton of success in the tech world, or they just sort of lucked into some relationship where, they had a co-founder that was a whiz and they just didn't need that side of it. So I tried a couple things more on the tech side, didn't really pan out, wasn't my sweet spot. And I ended up getting a great job out of college. I was working at McKinsey doing business analyst work, so strategy consulting. Didn't totally know what I wanted to do yet. So consulting was a great way to kind of sample a number of different businesses and learn about different, functions and departments within, big corporations. And definitely still had my entrepreneurial spirit alive and well during that time at McKinsey. And it was probably within 6 months that I was kind of starting to think about what I was going to do on my own and how I was going to break away. Ended up doing that, stayed for like 2 years effectively, which is the BA program, business analyst program. And from there, I started this lifestyle and events company in New York. So we were actually doing a bit of real estate. So it was this like co-living concept. So kind of like WeWork, but for living and geared towards creatives and entertainment folks. And we were master leasing these massive loft spaces and kind of chopping them up and basically creating a big glorified roommate situation, right? With communal kitchen and basically allowing people to more cost effectively move and live in New York City. And we had all of these like events that we would do and, whether it was parties or more networking events or things like that. And it was a lot of fun. Wasn't super profitable, but I met a ton of people. And it was actually through having some of that real estate that I ended up, having my first Airbnbs. And not only was that company not profitable, but that's actually, part of how I got into the debt. It was, I was losing money on it ultimately and dug myself in a little bit of a hole. But thankfully I had some of these real estate assets, leases on apartments in New York that were very valuable. And I linked up with this guy, Jesse Comley, who's actually a partner of mine now. And he was starting this Airbnb management company very early on and kind of convinced me to try to shift a couple of our lofts into Airbnbs. And, our revenue like quadrupled overnight type thing. It at least tripled after their fees. So it helped me kind of dig out of that hole much quicker than I might have otherwise. And I started, building that portfolio with a partner, this guy, John Cole, who was my partner in what became Blink Hospitality, which was that short-term rental business. We were doing a lot of lease arbitrage, right? We'd lease units and then sublease them on Airbnb, mostly urban markets. And This was sort of, we had, I don't know, a handful of units in early 2018. And I had friends of mine that were asking, hey, can you help me, do the same thing? Like, would you manage our properties? Would you help me find them? And so we started managing for other people. And that's when I ended up quitting my job and becoming CEO and really running that business full time, and grew it from handful of units at the beginning of 2018 to a couple hundred under management by the end of 2019 across like 10 cities. So it was quite an operation. We had a very distributed team. So we had like remote offshore people in the Philippines handling a lot of guest communications and other back office functions. And then we had on the ground staff that was mostly, 1099. So it was very kind of staff light and really helped us when COVID hit. We didn't have this massive corporate overhead because we had mostly urban properties and demand kind of, vanished overnight. I was on an offsite with my team in the Philippines and in Boracay in the Philippines. And like, we had this amazing villa. And literally when I was there was when the US shut their border, like early March 2020. And all of our bookings basically got canceled. And that was a real trial by fire lesson in leadership of like, how do I keep the team inspired and motivated when literally the sky is falling, and we're supposed to be on this retreat. So that was really kind of interesting to navigate that. But long story short, that business survived because we were staff light and had very little asset light, had very little overhead. So we were able to kind of pivot and do longer term stays. But it really pushed me to start looking for land and eventually build what became Onera Fredericksburg, this like truly one of a kind, unique stay property, might be called landscape hotel is a term I like a lot. And so COVID is really what kind of pushed me to do that.
Okay, and year 2022, you exited the whole business or part of the business to REIT. Can you share more about this?
In 2022, this was about a year after opening Onera Fredericksburg. And we opened to strong success out the gate. I mean, we had, $500 ADR, 90% occupancy pretty much as soon as we opened because we had such a unique product that really stood out. Initially, we were just booking on Airbnb and we were doing very well that way. Then we started to experiment more with social media, started working with influencers and saw how incredible of a return we got from working with influencers, and really booking more of our stays direct, cutting out some of those Airbnb fees. So started doing more of that, saw success there. And this REIT, so Real Estate Investment Trust, a public company that invests in real estate. In their case, it's hotels. So Summit Hotel Properties is the name of the REIT, and they invest in hotels, specifically limited service hotels. So most of their portfolio is like the higher end of limited service hotels, like Hotel Indigo, maybe a Courtyard, Hyatt Place, but like nicer ones, right? And so our product was limited service, so it fit in that bucket for them, but it was very unique in alternative hospitality with extremely high returns. And their board had a mandate to get into alternative hospitality. So they were looking at like short-term rental portfolios, they were looking at glamping, they were looking at all this stuff, and they really liked what we had done. Even when we just opened, we started talking to them and they were really excited and interested in what we had built. And then it took like a year to get the deal done. Trying to get a deal done with a big public company can have its challenges and take a while. But ultimately we got the deal done with them, sold a majority interest in Onera Fredericksburg to Summit. We kept a minority interest and also continued to manage the property. And then they were going to assist us in expansion. So we owned a piece of land next to Onera Fredericksburg. We are JV partners with them in expanding to that. And then we have a second location in Wimberley, which is an hour away from Fredericksburg with stunning hill country views. So that's 20 acres, 28 units, and event space. And they provided some mezzanine debt, so junior debt, and then helped us get the senior debt. So really helped fill out the capital stack. And then they have an option to buy that property, within the first year of it opening at a premium.
Just to be clear, what is the difference? You've been mentioning two companies, Oasi and Onera. What is the difference?
Yeah, so Onera is the brand, right? The landscape hotel brand, the treehouse resort that we built in Fredericksburg, and then we're building in Wimberley. Oasi is my experiential hospitality management and marketing company. So Oasi is where I house all of our, shooters and editors, creatives. Oasi runs, my personal thought leadership content and, ebook and courses we have rolling out. And then Oasi is also the development arm that I'm going to be building future one-of-a-kind landscape hotels under. So my next property, we're actually going to brand Oasi, and it's slated to be in South Florida. So it's a tropical landscape resort experience. Think like bring, Costa Rica, Bali, or Tulum vibes stateside.
Okay.
Yeah.
Onera is the brand, Oasi is the company. What is the size? What is the revenue?
Yeah, so Onera Fredericksburg, that location is currently 11 units. We're doing about 1.6 million per year in top line revenue. We manage Onera, right? So there's a management fee associated with that gets charged to the ownership, which is primarily the REIT. And we also have one on-site employee, right, that assists with any like guest emergencies or things like that. So light maintenance. So it's very staff light. And we actually just hired one full-time cleaner as well. And we supplement with third-party cleaning services. And everything else is vendors. And now the rest of the management of the property, so the guest communications, the pricing, the social media, the marketing, all that side of it is housed in the management company. And that is, it's a separate group, and we manage for it.
Okay. How many hires have you done so far, personally?
In my career?
No, when it comes to building those two businesses, pretty much.
So I'll back up a little bit just so can explain where it came from. But so Blink Hospitality, my short-term rental management company, we actually hired about 20 people in the Philippines at our height. So, quite a good sized team over there. I had a local GM and, some help on the accounting side. So probably 25 hires or so for that business total. And then not including like third-party cleaners and, local maintenance people and folks like that we needed to run the distributed portfolio. Then with Onera, like I said, hired on-site manager, have hired, a handful of full-time cleaners, and then, third-party services as well. And for Oasi now, we have hired about a dozen people full-time. So 4 or 5 of those are offshore Philippines team that handles guest communication, helps with some of our data entry and reporting and bookkeeping and stuff like that. And then like half of the team is actually on the media side. So, we have a shooter that travels, and we have some like part-time shooters as well. We have an editor group that storyboards and a social media manager and a VA that supports that social media manager. So that's a really big piece of the business. And outside of that, it's, me, my co-founder in Oasi, Jesse, who runs revenue management, really built up the whole content and media team. And my GM, chief of staff, Tom, who is my right-hand man, handles, 80% of the stuff that I used to do and frees me up to do stuff like this, to grow the business, to go after big opportunities, to raise money. We have another hire that's a pricing analyst and associate that also helps us on the marketing side that sits on Jesse's team. So all told, we're about a dozen full-time and a number of part-time folks.
Okay.
Yeah.
I will ask about the social media and how you manage it all very soon. Before that, let's talk a little bit about the fundraising. How has it been for you, number one? And number two, what strategies have been working very well when it comes to raising capital for your projects?
Raising money, the environment has really shifted quite a lot in the 4 or so years that I've been involved in the raising money side of things. So initially, I was raising, friends and family money for Onera Fredericksburg. That was very easy, actually, because I had clients that I had made money for on the short-term rental management side. So I was just able to call them up and say, hey, I want to do this exciting concept. It's perfectly suited for the current environment with COVID and these sort of private getaways and driving destinations. And everyone kind of loved it that was in our inner circle of clients. And so they all wrote, $50,000 to $200,000 checks, and we raised somewhere around $1 million pretty quickly to get the equity in that project. The harder part was probably the debt, which still was, ironically, with no track record, was easier back then than it was 2 years later after I had an exit to a REIT, because we were in the interest rate crisis and all these banks were hitting allocation and didn't have enough deposits. And it was this whole mess. So despite having a track record, it was harder for me to raise debt the second time than the first time, which was disheartening to say the least. But the first time, talked to a bunch of local banks, like 20 or so. Almost all of them said no, like, you're crazy. It's hospitality during COVID. We don't want to touch it. It's this unique, non-flagged hotel / glamping / STR thing. Like, we don't have a bucket for it. Like, go away. And finally found one bank, and one banker in particular, that really loved it, loved the market of Fredericksburg we were going into, and really believed in the concept. And he's like, I love this. I would love to take my wife here. And he was kind of our champion in loan committee, that helped us get it through. Certainly helped that I had an operating business that could guarantor the loan, provide some of the equity capital needed with Blink Hospitality. And, me and my partner had to PG the loan too, which I try to stay away from now. But first project, it's hard to get away from the personal guarantee sometimes. And so that's how we were able to get the debt and finance that first project. Second project, as I said, was much more challenging, much bigger. We were seeking between $15 and $20 million in debt financing of some sort. So it was a bigger number. My personal guarantee wasn't going to go as far, on that level of loan. And it ended up working out that we were doing the deal with the REIT because they were really able to help. They helped provide us a letter of credit, which is effectively like a backstop to the loan. So if we defaulted, the letter of credit would kick in and allow, the interest to get paid that way. But we pay for that. We're paying for that letter of credit with a margin, right? But that's just, the way to get the project done and get it financed was to get creative, have the REIT help us, kind of backstop it and give us some more credibility. And they actually provided some what's called mezzanine debt, so junior debt below the senior, into the capital stack as well. So that's how I got my first couple projects done. We also raised a small real estate fund. So after that initial friends and family raise that I mentioned for Onera Fredericksburg, we raised a $3.5 million fund that a third of it basically went to Onera Fredericksburg, and that kind of got rolled into the fund. We did a hotel in Palm Springs, which was another third. And then the initial equity needed for Onera Wimberley. And that basically made up that first fund. So that's been my experience so far with raising. I am now going to market again a little over a year after closing on the debt for Wimberley, and seeking equity and debt financing for my next project, the one I mentioned in South Florida, the tropical, landscape resort, likely branded Oasi. I think I actually have a lead investor, which is exciting, from a conference I spoke at, IMN conference, IMN Short-Term Rental Forum that was in Miami. I met a high net worth individual that has a small STR portfolio, heard me speak on a panel, was very interested. The moderator, said, "What are you up to next?" And I said, "Oh, well, just so happens I want to build something here. If anyone's interested in partnering, let me know." And this guy kind of ran up, and he's very well situated to be a capital partner, and we're moving forward on doing a deal together. So sometimes it happens like that, and sometimes it takes banging on 100 doors, right?
How long do you expect this next fundraising round for you to take, so you could move on with the development and everything?
So for the Florida property, assuming everything goes smoothly with this lead investor, the way that it's structured is that he would help raise the majority of the capital. So the reason to do that, and the reason to kind of split up the GP in the real estate syndicate deal is with the assumption that he's going to accelerate the capital raising process, right, and make that easier. So I was just out there last week. We met with 8 of his investors, varying levels of interest. There's a lot more of those meetings to come. And it's tough to say, but probably somewhere in the ballpark of 3 to 6 months, I would hope at most. But the hope is that it's less, right? That more like 3 month, even 2-3 month time frame to get most of the commitments by partnering with a lead investor.
So I want to talk a little bit about a few of the tweets you made. And you made a very bold prediction. You've said that the collapse of the legacy hotel names will begin shortly, and no one is talking about this. Over the next 15 years, greedy and imaginative Airbnb hosts will realize their time, efforts, and resources are insufficiently leveraged on single homes. They will enter to sleepy and stale hotel space. There will be an explosion of creativity and excitement. They understand tech stack, storytelling, hiring, digital marketing, cash flow, customer service, and project management. They have touched and led every initiative in the business. An army of old hotel disruptors are coming. Again, very bold prediction by industry expert. Please talk more about this.
Yeah, happy to talk more about it. So look, the hospitality industry and hotels in general have had very little innovation for decades, right? For many, many years. I mean, really since the branded hotels really got big in the 70s and 80s, and loyalty rewards points got huge, and that whole movement, like that, there's not been a whole lot of innovation since then. I mean, there's been a little bit of things at the margin, right? Oh, touchless check-in and things like that. But it's really at the margins. And I believe that that's because hotels have a very high barrier to entry, right? You need a lot of capital to get into that game. And the returns are good enough, right? Like the returns are still solid. These are the way things have been done for many years. The capital is kind of comfortable with that. But I think the barriers to entry are starting to sort of get lower, right? They're not as big as they used to be because of things like social media, right? I can build, let's say, a proof of concept. We could call Onera Fredericksburg, right? 10 units, 11 units, raise some friends and family money, figure out how to get it done, and then showcase that on social to raise awareness to institutional investors, to high net worth individuals, and then be able to go out and really build true hotels and resorts that can compete with some of these, big brand names. And the belief is that there is the Airbnb host, the hostrepreneur, if you will, right? They're looking at it from a very different angle. And this is only a subset of those people, right? There's some Airbnb hosts that have commodity short-term rental product. And I don't really think that they're the ambitious ones or sort of the ones that are on the cutting edge of where everything is going with like booking direct through social media and really building a brand. So the ones that are ambitious and innovative minded around hospitality that grew up in this kind of, hey, I can get a few Airbnbs going with very little capital and sort of start my little stays business and kind of grow from there. I think that's a new thing, right? And you're going to start to see these folks rolling out these super one-of-a-kind experiential hotel products that are just in massive demand because the big hotels are not offering that. It's not their model. It's not what they know how to do. Sure, might they buy some companies and try to expand the platform? I think that's certainly possible, right? The ones, like there's probably, at least some of the big brands will really try to invest in this area and may figure out a way to kind of leverage what's going on and partner with some of these like upstart innovators in hospitality. But I don't think that the innovation in the space is going to come from within these big box hotels. So that's kind of the spirit of it. Does that make sense?
Makes total sense. And another tweet which pretty much shares the same idea. The most compelling and profitable real estate play over the next 15 years will be not the short-term rental house, not the multifamily, not storage, but it will be luxury, unique stays, 50% ARR, inspired customer, attracts top talent early in the space. And I think it concludes really well of what you just said. Now, I want to talk a little bit about the social media part of what you're doing, because again, that's another thing which you've been posting about, and you said you had like 10 people on your team. Where did this idea came from on focusing on this, and how has it been so far?
It's been fascinating. It feels like we're on the cutting edge of a movement, right? So it's super exciting. We're not even into the first inning of where this is going, right? And I posted a lot about that as well. I truly believe in short order, Instagram and social media platforms in general are going to be the primary way that people find where they want to go on their next vacation and their next stay. It's very well suited for, dream scrolling, right? Of dreaming up your next vacation and the place that you want to do your next trip. So I think it's very well suited for that. I can't say that like this idea came to me in a dream and we went after it. I mean, it largely came from an influencer that hit me up. I know they like to be called creators, so we'll say creators, okay? A creator that hit me up on Airbnb when we were just listed there and said, your tree houses are so cool. Can I come and do a giveaway post on social media, and I'll help generate some bookings for you? And at first I kind of dismissed it, and she persisted. And so I ended up saying, okay, let's give it a try. We spun up a direct booking website, had her come out, and her handle is at Texas Explorer on Instagram. And she's got a very targeted following. She does all, Texas travel and a lot of experiential, glamping and outdoor hospitality. Had her come out. She did a post and a giveaway, and we did like $10,000 to $15,000 in direct bookings just from that post. And I didn't pay her anything, right? Came back a month later, did another post, same result. So that was that was all I needed to see to be like, all right, I need to invest in this a bit. And for the rest of that year, I mean, I was our social media manager. I hadn't hired somebody yet. I wanted to learn at least a bit about it myself. Amanda, who is Texas Explorer, actually helped me a little bit, gave me some pointers early on, was just posting photos that we had, didn't have a lot of video. So like really wasn't getting a lot of engagement with the stuff that I was posting. But we had influencers and creators that were hitting us up to come stay and do giveaways. And so that was just really helping build the audience and feed the direct booking engine. So in that first year, we did 30 to 35% direct bookings. And then in the second year, 2023, is when we really kind of doubled down on social media. Tried to hire an agency that didn't work super well. So then ended up building out our own team internally. And that's really when the whole thing took off. And we jumped to 75 to 80% direct month over month at this point, which is quite high, even higher than I had anticipated. And we've grown our followers from like 18,000 in April or May of 2023 to close to 60,000 now. So about 3x in less than a year.
And doing this through social media, using Instagram, on your post, you said as well that it's $0 paid in platform fees. I'm not really aware of Booking or Airbnb, but I think that's saves you a lot of money on commission, right?
100%. So the platform fees is one big piece of it, right? So Booking.com, Airbnb, most of these companies charge between the guest and the host somewhere around 15%. Okay. And you're going to pay 3% either way. That's just a payment processing fee. It just kind of is what it is, even if you're going direct. But that remaining 12 or 11% goes right to our bottom line because we try to achieve price parity. We're not offering discounts to book direct because what we found is we're actually reaching a more emotional and aspirational buyer on Instagram versus in Airbnb, where they have a number of different options that they're comparing against. They're kind of price shopping. When they see our product on Instagram, it's kind of like, oh, I have to have that. And whether it's $100 more or less doesn't really matter, right? Because they have no real comparison of what it's worth. So we've had a lot of success with that and really driven a lot more money to our bottom line. And it helps us achieve like industry leading margins. So our margins are, in the 50s, 52 to 55% NOI margin on an 11-room hotel, which is like unheard of, right? Even bigger hotels with more cost efficiencies, usually you're in the 20s and 30s. So we only expect that number to grow as we build, resorts with more keys. The platform fees is great. One other piece that is also very important that I wouldn't want to leave out is that we own the customer, right? We own that relationship when they book direct. We can retarget them. We run email campaigns. We can, let them know when we're opening new properties. So that's very valuable that you don't get with the booking platforms.
Yes, this would have been my next question. Like you said as well, that 100% ownership of customer relationship. Do you collect emails or how does it work? And another question: do you use any SEO or you're all in on social media platforms, Instagram, TikTok, or do you run any ads?
That's not true. We've spent like singles of dollars on ads in the past like month. We are very, very early into testing ads and seeing kind of where we can go with that. So that is a strategy we're looking at and that we are testing currently. We do email campaigns, as I mentioned. So we do collect emails and we do run campaigns to try to encourage repeat guests. And we try to funnel people from our Instagram to the Onera newsletter, and try to convert them if they're not immediately converted through Instagram. And then SEO as well. We're working on a big SEO push right now. We have not done much with it to date, but it's an area that we are really investing in currently. So we've had a ton of success with organic social media over the past couple years, and now we're really expanding our digital marketing suite.
There are a lot of people following who are in traditional businesses. What would be maybe 3 things you would say when it comes to social media platforms, let's say Instagram? What do you think they could be using in a similar way like you're using in order to get customers?
Yeah, so it definitely does come down to, it's certainly a lot easier if you have like a viral product, right? Something like Onera that is very Instagram friendly, like Instagrammable. So if you have that, it makes your life a lot easier. If you don't have that, then you have to lean into some other area. So you almost need to create a character, or maybe it's the founder or owner, and there's a real storytelling and like connection to the founder piece, or there's a storytelling component with the product, like how it's made, or if there's some social good that it's doing. So you need some sort of hook, right? Whether that's the product itself or the founder story or the origin story of the product. So first you got to identify that, or you create a character like Ryanair. Right? Ryanair has this character on social media that's like constantly spoofing themselves, right? And making fun of themselves. So you can lean into humor or something like that, but you need some sort of shtick, right? So that's the first piece. And then from there, it's really about 2 things. One, working with influencers and creators that have a targeted, relevant audience and an engaged following. So you want, we look for 5% or higher engagement rates, which is high. I mean, we'll often accept 2 or 3% if it's a very targeted, relevant audience, but you want those 2 things. And then you also want to start to create your own professional content that has the chance to go viral. And you can work with an outside agency or content creation company to do that for you. Or if you have the scale and it makes sense, you can start to experiment and do some of that stuff in-house. But it's not easy. It's expensive. To create really good, high quality video content is not cheap, but we found it to be extraordinarily valuable.
Great ideas, because let's put it in this way. They don't know too much about Instagram and all that. They think it's all about those influencers and creators, as you said. But behind this, there's a lot of business which you can do.
Yep.
Listening your journey, it seems like it's been quite smooth. Maybe reflecting on what you've built and what you've gone through, what have been the biggest challenges you've had, and how did you overcome them, and what did you learn?
Yeah, so I would say that the biggest challenge I've had to overcome is moving away from this kind of hustler, skimping mentality, like cutting corners, trying to do things on the cheap, to more of a sophisticated operator that's willing to pay for quality, that's a sustainable product and really going to drive a ton of value. So when I first built Onera Fredericksburg, we wanted to do higher end. We were investing in the product, but we made this really silly decision. I actually just wrote a newsletter about this and put that out today, where we sourced a majority of the structures from manufacturers in China. And I had never done that before. We didn't have quality control people. And it really burned us, ended up trying to save a couple $100,000. The shipping costs and tariffs went through the roof during COVID. So that 200K got cut by 80,000, and now we were only saving 120. And then the product was delayed 2 months because of the disaster in the Suez Canal. So now we're 2 months delayed, and that's hundreds of thousands in revenue. And then the final piece was when everything arrived, some of it was either unusable or required like retrofitting, like broken parts that had to get fixed. And just thousands of hours of local labor to figure out how to make all this stuff work. So, I mean, all told, we probably lost a few $100,000, right? And initially we thought we were going to be saving a couple hundred. So that was a real like penny wise, pound foolish moment that I won't repeat. And we, now we pay for quality. It's how do we build something that's going to last and really blow people away, right? That's what we're trying to build. So I'm not afraid of a higher cost per key. Some of the stuff that I'm working on building now is $1 million a key, but we are also doing better numbers than 5-star hotels. So, which also cost, $500,000 to multiple million a key. So the yield, the profit, it makes sense, right? There's, effectively the kind of product we build, these luxury landscape resorts, effectively have a 15 cap rate, right? So we're generating 15% NOI on the total cost or value of the product when it's built. So that's extraordinarily high, right? Most things trade somewhere between like a 4 cap and a 9 cap. So if we can build it to a 15 and sell it at even like a 7 or 8, there's a massive spread there. And that's one of the reasons I think this opportunity is so compelling, and why I tweeted like, hey, unique stays is the most compelling real estate opportunity that you read before. So yeah, that's China and kind of skimping, trying to cut corners, big lesson learned. And then I think the other one, which is somewhat related, is just paying for quality people, right? Hiring and hiring slow, firing fast, really trying to only hire A players and just be unwilling to settle for a B or a C player, even if it means I have to wait, right? And I can't, and we're spread thin, or we can't do something yet. Because, I mean, I found that hiring a B or a C player, and having them in the org can create a lot of problems, especially if the rest of your people are A players. Like they get resentful, that person's not carrying their weight, and you might be afraid to let go of them because they have some skill set. But once you do, often find that it's addition by subtraction, right? The team, everything runs smoother. There's all these less issues and drama and excuses, right? Because you're left with A players that have accountability, and you can replace that skill set, and you want to, like I said, hire slow, run people through a very rigorous interview process. If they're not willing to do it, then they're not bought in enough to your company and your vision. And on the flip side of that, we've had to fire people on the first day if they didn't align with the culture and the values of Oasi. We had one person we had to let go on day one because it was very clear that it was all about her and not about the team, and that wasn't conveyed in the interview process, right? It was, she was very good at interviewing, and we thought we had a rock star. And on day one, she's training with our manager, and basically dictating what her schedule is going to be when she had said she was totally flexible on schedule. So just these kind of red flags that pop up early. It's like rip the Band-Aid off. We made a mistake, move on.
You mentioned the goal is to be a sophisticated operator instead of just a hustler. How do you manage it all? I mean, how does your day look like at the moment? What type of decisions you're making during the day, and how does it look like?
Yeah, so we talk a lot about this internally. So my role as CEO and just co-founder in the business is really building the opportunity and future opportunities and driving the vision, right? Increasing our exposure, which brings opportunities to the table. And I'm also an operator, so I've been in the business, right, and sort of in the nitty gritty. But we're always trying to make sure that I'm more working on the business and growing the business instead of inside of it. And my partner Jesse is more responsible for making sure that the SOPs and processes and team is getting built out and hiring processes are getting created effectively. So he's more working in the business and trying to improve the business so that we can scale, right, and that we can meet these opportunities that I'm now able to bring to the table. That's kind of how we're set up now. And thankfully, right now, most of my time is focused on business development opportunities, partnering opportunities, talking to investors, pushing forward development, concepting new, amazing, out of this world projects that excite me and inspire me, trying to find land that's going to be the sort of linchpin of whatever next landscape hotel we want to bring to market. So I'm working on very high value activities that relate to future opportunity for the business. So, it's podcasts, it's going to conferences where I'll, may meet a lead investor. It is, brainstorming with my team about content that we're going to put out. I'm getting a lot of help from the team in terms of pumping all of it out, but we're brainstorming together, and they're pulling as much insights and information from me as they can to try to pump out all of this content and ebooks and all the rest that we're developing. And then it's raising money, talking to potential partners. I am talking more of my day than I would sometimes like, but it's the highest and best use of my time. So. And it's the best use of my time in terms of enterprise value for the company.
Attending to this podcast could potentially bring you one person who's interested in what you do. So my next question is the topic building in public. How has building in public improved your business? What was the moment when you were like, okay, I should put more effort into this? And because I know it will pay off.
It's newer than you might think. Like, we only really started putting me out there, and I only started getting going on Twitter and LinkedIn in like April of last year. April, May is really when we started. And a lot of it was inspired by Isaac French. If you've seen him, Live Oak Lake, similar space to what I've done with Onera up in Waco, Texas. And we actually had talked, and I knew him, and he kind of like, I think early on he looked up to what I had done because Onera was a little bit early to Live Oak Lake. And then he went all in on media and kind of blew up on Twitter and with his experiential hospitality class. And I was like, wow, seeing what he's done in terms of media, like Onera is just as cool, if not cooler, than Live Oak Lake. And it's more units, and I probably need to share this story with the world, right? So that's kind of what was the impetus behind it. And just a belief from like me and my co-founder Jesse and the team of, founder-led businesses is the future. And I was very heads down. I didn't necessarily want to be like any sort of public figure or, authority in the space or all the rest, but like that's the way that you win in business today, I believe, right? I mean, you look at even these massive companies like Apple, right? Apple's social media following versus Tim Cook. Like, Tim Cook blows it out of the water, and he's not even like the founder, Steve Jobs, right? Brian Chesky with Airbnb has like, I don't know, 5 to 10x the followers that Airbnb does, right, on Twitter. So I think that people connect with the founder, they connect with the origin story, and it creates real buy-in that I think is a big missed opportunity actually with a lot of the big box hotel brands, right? Like nobody's connecting with at least from the consumer level, right? Nobody's connecting with those CEOs and people on the executive team. So trying to be more accessible, trying to be kind of transparent and vulnerable in that way, I think builds a lot of connection and creates evangelists for your brand and for what you're trying to do.
I really believe in this too, and I really believe that it will compound over time. And when you sharing your actual journey of building what you're building, I think 5 years, 6 years, 7 years from today, whoever finds you then, they can just look back of what you've done, and more importantly, on how you've grown. And I think they pretty much get to know you before you actually meet. And I think in that way, it's going to be much easier for you to raise additional capital or whatever you want to do. So from here, I would like to ask from you, what do you know now about building in public that you didn't know before you started?
So first I want to just add to what you said, because I think it's spot on. And I've already seen it in only like eight or 9 months of doing this, right? I've already seen it. So I spoke at that IMN conference I mentioned for short-term rentals. And this lead investor, came up to me. We started talking. We basically struck a deal and we're moving forward. And he saw my name, saw Onera, and he looked me up on his phone during the panel. And he saw some of the stuff that I had written, and after he saw some of the podcasts, and it created all this additional validation and that idea, like you said, of getting to know the person. And Daniel Priestley is a big, I think, speaker in this space around, and he talks about 7 hours of content, or 7 hours is kind of like the amount of time it takes to get to know somebody at some initial level. And I now have more than 7 hours of content out there on the internet. So people can get to know me, and I can tell when I talk to them if it's a potential partner or client or investor. They already kind of feel like they know me, which is a little weird, honestly, but it's good. And I think it's really helpful to build those relationships and get opportunities much more rapidly. So yeah, I've already seen incredible value from building in public, as you say. And I think it's just going to continue to compound. The more content that's out there, whether it's podcasts or posts or ebooks and courses and newsletters, there's going to be so much Ben Wolff and Awasi content out there that any investor that becomes interested and starts looking, they can feel like they get to know me, and we're much closer to getting a deal done and getting to close than we would be if they just met me from even a warm intro, right?
When it comes to, you mentioned ebooks and courses. Ebooks is, I understand this, but reading about people, listening what's going on Twitter, the courses side, if it's not free, some people are like, I don't know, it doesn't sound real. So what are your thoughts about courses especially?
We talk about this a lot. We've had a lot of internal debates around all free or paid or somewhere, something in between. And we are committed to, at least for a period of time, giving out a ton of free value, and we will continue to give a ton of free value. And the ethos is always, even if we charge for something, we want somebody to walk away feeling like, wow, that was a bargain. That was a steal, right? I would have paid 3x what I paid. So not as much into this idea of charging thousands of dollars and then having anyone walk away feeling, oh, maybe they kind of got me or sold me, right? Alternatively, we want to sell the product for maybe half or 3 times below what it's worth, and just have people walking away feeling like, wow, that was incredibly valuable. You get an evangelist, you build the network. We see it as a revenue stream for sure. I mean, there's opportunity there, but the bigger opportunity is being able to build these world-class resorts, right? And then sharing that with the world and getting, not just maybe a small audience of super high paying customers. And that can also work. I mean, we've talked about doing things like masterminds. And if we really think we can deliver the value, on like a higher price point product, I think we would do it. Like if we could offer something at 5,000 that we believe anyone who took it and actually invested time and energy into it would feel like they got 10x out of it, we would do that. Right. So we're not going to put anything out there until we believe we can at least 5 or 10x the return somebody would put in, like with their eyes closed. Right. So without like even, the edge cases of people that will take what you're doing to the nth degree.
I just wanted to ask before, that's why, because I'm a big believer in courses and masterminds as well. I've paid a lot of money for courses. I've took part of masterminds. I wouldn't say it changed my life, but it opened my eyes about business, about mindset, about various things. And that's why I found it very interesting, because in your case as well, when you're selling courses, masterminds, and you're making additional maybe $500,000, maybe $1 million a year, you could use this same capital, investing it back into your own business, and you can expand very quickly and very far. So I'm a big fan of courses and masterminds when done right. And I think you sharing your journey, so many people are interested in what you're doing, and you can just cut as you said, by just buying a course and going through the course, whether it's 4 weeks, 6 weeks, and you can be an semi-expert when it comes to theory, and at the same time you're a message away. I think this will save a lot of people making very expensive mistakes when doing it by themselves.
Yeah, 100%. Let us help you avoid the mistakes, right? Yeah, I'd love to hear from you, actually. What do you think makes a great mastermind group or a great course? Like what differentiates the good ones, right? And will prevent the Twitter backlash for rolling out another course, right?
Yeah, I think it's all about you actually doing this and then documenting the journey, because when you're doing something, every day is different. And when you put there a conclusion of what is going on, that's one thing. And when you're doing something you've been doing that for years and years, you've seen a lot. And if you put all this in the course with actual action steps, because a lot of people, they just want to buy your course, then they probably won't do anything. Then they will show up to your mastermind that they're still not doing anything. You don't want these people there, I believe. So that's number one. From the courses, after that, people keep selling masterminds, because these are those high energy gatherings, maybe 5, maybe 10, maybe 15 people. I'm not sure how big you want to build this, doing this 4 times a year. From there, I think one thing is that there could be people who would like to do it themselves, but there might be some high net worth individuals who really want to get close to you, and they might end up investing in what you do because they don't want to do it. They see it's a lot of work, a lot of knowledge, a lot of experience required, and they decide to invest. That's how I see that, because at the moment, looking around in the internet and talking with some guys who are doing marketing for various companies, people just selling courses on how to find new clients. But if you're teaching on how to set everything up, and the real estate itself, it has a value. And if you teach people how to raise capital from the banks, from investors, I think it's extremely valuable. So, but yeah, starting from the courses, something from what I've seen as well, I'm not interested in buying a course which costs 1,000 or 2,000, because I think it can't be that valuable. If the same thing could cost 8 to 10,000, I'm like, okay, take my money, because it must be good, and then I'm committed.
Gotcha.
Same with probably the price of the mastermind as well. It can't be just 5,000. Must be something more expensive. And I've seen people charging like 36,000 for a year, and they have like 4 gatherings, and then those weekly or bi-weekly calls and all that. So there are probably more people who know more about this, but that's what I've seen. And but overall, it works very well if it's a great course, and it could bring a lot of additional opportunities when it comes to additional capital to reinvest, and more importantly, probably the people you'll meet along the way.
Yep. Yeah, totally. I mean, and we like to reinvest the other way too. Reinvest our earnings in real estate into media. So there's a really synergistic relationship there. We can reinvest media into real estate, and we can go the other way too. So
Okay, little bit about the future. How big do you think and believe you can build this business?
so I think the bigger vision of innovating hospitality for the modern traveler, which is Owasi's goal, I mean, that's a multi-billion-dollar opportunity, right? That is a massive opportunity when you think about how big the box hotels are and the hotel spaces, and even like the high-end hotel space. It's in the tens of billions, like in the U.S. alone. So it's a massive opportunity. And, for me, I want to build up Owasi. I want to build up Onera. I want to build up other brands. I want to partner with folks and work as an advisor to help other brands and products get off the ground in this space, because I really believe in the mission of innovating hospitality for the modern traveler and providing a product that people want these days and there's not enough of. So yeah, I think it's massive. We're building a $53 million one in Florida, a $45 million one in Texas. I think both will be worth well over $100 million within a few years of operations. And that's just the kind of tip of the iceberg, right? If we can do two to four of these things every year or two, I mean, we're looking into the billions pretty quick, right?
Mm-hmm. I've been only talking to you less than an hour. You seem very relaxed, very happy. How has entrepreneurship and building your business changed your life and changed your family life?
Yeah, the balance is always a challenge. And it's interesting. Sometimes I find balance can be even more challenging when I'm super passionate about what I'm doing with work. Because I have a little bit of a workaholic nature in me for sure. And I have a soon to be 3-year-old. Obviously, me and my wife, spend a lot of time together, make sure to do date night once a week, spend a lot of time with the family on the weekend. And it's just about, how do I carve out the time? And when I am spending the time, how do I be as present as possible? Which is a challenge. Like sometimes I'm off in the clouds thinking about this amazing opportunity or stressing about this big challenge that we're trying to overcome. And it's, I got an office. Actually, I used to work out of the house. And I do think that having an office really helps to create some separation. So ideally, like when I drive home, even though it's just a few minutes from my house, I can leave the office at the office and I'm not taking my computer out. If there's an emergency, fine. I put my phone on do not disturb. People know if they call me twice in a row, they can get through. But it really cuts down on me dealing with any sort of business after, 6:30, when I want to spend some time with my son, my wife, like before he's got to go to bed. But, 8 hours a day isn't enough to build a company like this, right? So what do I have to do? I got to get up earlier. I got to go to bed earlier. I got to get up earlier. So for me, it's, how do I keep kind of trying to get up earlier, get more done on the front end of the day? And for me, I'm a morning person. That's my most productive time. I try to work on my biggest challenges and like most creative endeavors first thing in the morning and try to knock that out before I'm hopping on a zillion calls, right? Whether it's podcasts or business development or partners or whatever. So that's a little bit of, I guess, insight into how I try to balance. I also try to make time for hobbies. I'm a big golfer. I like to work out, and I try to split my work day effectively in half. So I'll go to the driving range or I'll go to work out in the middle of the day. So it's almost like I have 2 mini work days in one, and it really helps me from getting burnt out by the end of a 12-hour workday.
I'm a big fan of this as well. Ben, it's been great fun. Let's wrap up with the famous 5. How old are you?
36.
Favorite book?
Most influential is certainly How to Win Friends and Influence People. My dad kind of turned me onto it when I was in high school, and I think shaped my life in a lot of ways.
Married, single, kids?
Married, and a 3-year-old, maybe another one on the way, hopefully.
What car do you drive?
Tesla Model 3.
What's the best investment advice you've ever got?
This is an interesting one. So I actually got it from my co-founder, Jesse. I think it's good to set aside some money and diversify and all that. I'm at a early stage in my career, and I still, I feel like with risk comes big reward. And for me, it's like I should be reinvesting as much as possible, if not every dollar, into myself and the opportunities that I'm creating. Having money sort of sitting aside in some account I can't touch, that money could be much better served in building my next, landscape hotel. So, I try to be fiscally responsible and still have, some money tucked away, but as much as possible, I try to reinvest in what I'm building.
Perfect. Where can people find you?
You can find me on LinkedIn, very active there. Ben Wolff with 2 Fs. If you search Ben Wolff Onera, I'm sure I'll pop right up. And yeah, on Twitter, I'm at Unique Stays Guy. So those are the two platforms I use the most.
Okay. Thanks again for doing this. I really enjoyed that. And I really hope that some people will reach out to you because you definitely know what you're doing and you have an excellent track record.
Thanks so much, Mick. Really appreciate it. And yeah, it's been great chatting with you. Thanks for having me on.